Now, Nazara Technologies is the next company that we are engaging with. The company has set aside a war chest of $100 million for mergers, acquisitions in markets like India, Europe, North America. The company previously said that they expect FY24 margins to be in the range of between 12 and 13%. Nitish Mittersain is Joint Managing Director and CEO at Nazara. He's joining us right now. Thanks very much, Nitish. Appreciate you joining in here on CNBC-TV18. It's good to speak with you, as always. You've also raised money from prominent individual investors and funds as well through a pref route. Could you talk to us about what exactly is on your mind in terms of acquisitions? What space are we looking at? Do you already have this chalked up in terms of what you want to do? And it's a matter of sort of doing it, signing on the dotted line. Just give us a sense.
Yes, of course. As you know, we raised 760 crores in recent months, and the company was already well capitalized. I think at a consolidated level, we have, in excess of 1,500 crores of cash. So very well poised to, continue to acquire and build, which has been a strategy over the last few years, which has been quite successful as well. Especially right now, we are finding a lot of opportunities in the Western markets. I'm here in San Francisco attending GDC, which is the largest gaming conference that happens. And there's quite a lot of interest to work with Nazara. So I think, especially focused on gaming studios, similar to the WildWorks acquisition that we had done last year. We are seeing, the similar playbook can be replicated with slightly larger studios, which we are pretty actively focusing on building a pipeline. And hopefully in the coming quarter, Q1, latest Q2, we should be in a position to close some deals.
Deal, not deal, right? Deals. So more than one. And
hopefully so.
And in what space, if you can, without, of course, not getting any more specific, but in what space? Gaming, right? And what would be the size broadly? How much would you spend towards these deals?
Sure. So I think we've earmarked, as you would have read, about $100 million or equivalent to a little over 800 crores in INR to invest in these opportunities. From a target perspective, we are looking at game studios that are profitable, generating good cash flows, and own gaming IP, very similar to the Animal Jam IP we picked up last year. I think that's turned out pretty well for us. And we've now got a playbook that we can replicate at a slightly larger scale. In terms of revenues, we're looking at businesses or studios that are at least 100 crores in revenue, but could be anywhere from 100 to 250 crores in revenue, with a profit with a EBITDA margin in excess of 15 to 20%.
Okay, all right. Hi, Nitish. Good morning and good to see you in. I hope you're having a good conference, as you told us, plenty of interest out there. I want to ask you about two possible acquisition targets. One is on Smash. Reports are indicating that you all are interested via the, the insolvency route, I think so. So tell us, give us an update on that. And also the last time we chatted, I briefly asked you about Delta's online gaming business. Are you all interested? Yes. Are there any kind of talks that have taken place so far?
Sure. So with respect to offline entertainment, we do believe, or we are building a thesis where we think that there could be convergence between, gaming online and gaming offline. And that kind of piqued our interest in Smash. We have, applied in the NCLT process, and we'll see how that pans out in the process over the next few weeks or months. As far as your question around Delta is concerned, generally, if you remember, the online RMG space or the real money gaming space has gone through a turbulence, and more clarity is, coming out, especially on the going forward taxation, etc. So we are in talks with multiple parties, in that space to see how we can synergize and how we can build a larger business on the real money gaming front going forward. So definitely looking at all the opportunities over there.
And Delta's business would also be on your radar then?
It possibly could be.
Okay. We'll wait by to hear more on that. Nitish, thanks a lot for joining in. I wanted to talk a little bit about Classic Rummy as well. Over there, you've recorded an EBITDA loss in the quarter gone by. Is it still loss-making, and is that the expectation as we move along into FY25 as well?
I think the business has seen improvement. There may be a marginal loss of profit in this quarter, But for us, I think the bigger picture is what's the scale-up opportunity in RMG. Classic Rummy is just, 50, 60 crore business for us, contributes less than 2, 3% of the overall revenues. So it was really originally meant to be a toe in the door when the market opens up. And
Okay.
can we use that as a consolidation vehicle, as a scale up in RMG, something we are exploring. We're still some time away from doing something significant there, but we're definitely quite excited about what could be the potential in the future.
So what can be the potential, Nitish? I'm still trying to understand, RMG, I mean, it hasn't been doing as well so far for you, but you're talking about the opportunities, and we've been speaking about this for a while. Over the next 2 to 3 years, particularly in RMG, what could the scale-up opportunity be for Nazara?
Yeah, look, as has been seen in India, the skill-based real money gaming has scaled up significantly in terms of monetization. In terms of the share of revenues of gaming, it has by far the largest share. Nazara over the years took a conservative view because we were waiting for more clarity on how this business is going to be regulated and how it is going to be taxed. In October last year, the policy that came out on GST kind of gave, I think, much more clarity, at least on the going forward taxation on this business. And that now gives us more confidence in terms of, moving ahead. In the last few months after that announcement, we have been waiting for the market to settle because a lot of the businesses have got reset, the business models have got adjusted. So we didn't want to rush into it. But I think in the calendar year of 2024, uh, we may see good opportunities to look at this scale up. And once we enter it, I think in terms of a revenue contribution could go up significantly from the 2-3% that it is there today.
Okay. All right. So that is on real money gaming, right? I also want to talk a little bit about the publishing division. You went live with your inaugural set of games. What is the kind of
Yes.
traction that you've seen so far, and what's the scope over there?
It's still very early days to give any specific numbers, and it'll take some time to scale. But what I'm definitely seeing is that global game developers are very interested in the Indian gaming market. They see, a 500 million users market still picking up on monetization, but a lot of the large players globally want to enter. And I think Nazara can be a great partner for them in the Indian market, to build local live operations and really scaling up their games in the Indian market. So we are investing in local game ecosystem, investing and working with local game developers. But you will also see in 24 us partner with many global gaming players to kind of publish their games in India. So this is a long-term play for Nazara, not an immediate large monetization play. But I think it's very important for us as a, being very strong in the Indian gaming market as a local player. This is a very strategic move for us.
All right, Nitish, we leave it at that. Thanks a lot for joining in and speaking to us. All the best with your, expansion in the RMG, the real money gaming business, and the M&A opportunities over there.